All right, now what do I have on the editor's radar today? First, I think it's IndusInd Bank. Now, IndusInd Bank has just been a late bloomer, so to speak. IndusInd Bank has caught up, but it was not the early bloomer in the banking rally. IndusInd Bank, if one looks at the quarterly update, what they've done, they've indicated a growth of about 20%. On a balance sheet size of IndusInd Bank, I've always argued that why has the bank historically grown at a pace which is lower than that of HDFC Bank? But now growth clearly seems to be making a comeback. Second, markets would also like to know as to where and how things are essentially moving, at least for Mr. Katpatlia, on the extension. That's the second thing where I'm hoping that markets will get some clarity today. And third, uh, essentially the new businesses which they have seeded, what is the update there? If IndusInd Bank today comes up with decent growth numbers, NIMs are under control, they indicate that things are looking up and they will be able to maintain the kind of growth rate what they've indicated in the quarterly update. There is a reason for IndusInd Bank in a sense to outperform the entire banking sector, because this is one stock which is nowhere close to its 52-week high, while a lot of other private banks in a sense have really caught up. Second, I think it's a Jeffrey's note on hospitals, which I would like to point out. We've been talking about that how hospitals have a long way to go, and I think hospitals still have a long way to go in terms of the structural appeal what they have for the entire markets per se. So starting from Fortis, which in a sense has underperformed, largely because of that entire court overhang, there is merit in revisiting. Apollo, I think, is expensive, but the other hospital stocks, P players are in a sense active, so a lot of consolidation is happening. Temasek and Manipal deal that acts as a benchmark as to where the large cap hospital stocks are headed. See, medical tourism coming back and normalization of the world, I think, is a big trigger. Health insurance numbers picking up, it is an indication that some of the hospital businesses will be now dominated by the insurance sector per se. So Fortis in my book is a special situation stock. Apollo Hospital is expensive, but the minute you go down the ladder, you talk about Narayana Hyderale, you talk about KIMS, you talk about Rainbow. It's a pediatric hospital, specializes in children care or child care. I think there is enough and more reason to get excited about where some of the hospital stocks could move. Global Healthcare, Medanta, new listing, has not done exceedingly well, but again, based on valuation parameters, Max Healthcare. So hospital, I think, could be a space which has been a mild outperforming space, but I would endorse the Jeffrey's note on what they have to indicate in terms of hospital stroke healthcare being a theme play for 2023. Hemang, Jani?
Yeah, Nikun. So I think hospital as a space is something that has done pretty well in the last 2 years, and given that the pharma space, particularly the generic one, is not performing, so part of that allocation is also moving into hospital space. And when we look at the performance, I think Apollo Hospital, though is expensive, it is actually delivering extremely good performance. Last 2 years, the EBITDA growth has been 24%. And the other businesses have started contributing. The debt has actually come down. So though it is expensive, we think that given the pedigree and the kind of visibility which is there, we would really go with that. Apart from that, I think Max Healthcare is something that stands out in terms of performance and valuation both. So people would want to have slightly higher allocation for the healthcare versus the pharma, space where the numbers are clearly not there for people to really participate.
Okay, so that was about the entire healthcare space, but let's get you a fundamental stock idea as well. Digant is betting big as far as PFC and REC is concerned. Is that a defensive play where he likes the dividend yield, or is there valuation comfort there as well? Let's listen in to the rationale coming in from Digant.
There are two more stocks in the PSU space which I think are very interesting. One is PFC, second is REC. They sit at the intersection of the capex and infra theme as well as the financial sector theme. And I think they are still at say zero point 0.5 times book. They were not growing very fast because of their large size and slow capex. I think a lot of these issues are getting resolved in PFC and REC. It's trading at like 8% kind of dividend yields. So if growth in infra really picks up, I don't think these guys should be left behind. SBI was the only one which was running, in the PSU pack a year back. Then we had follow up by all the smaller public sector banks, the Bank of Barodas and even Union Bank, Punjab National Bank. I think PFC, REC, these are the only two ones which are left, and they are really pure play, on power, infrastructure, logistics, all these kind of sectors. So that is something which I'll keep a watch on in 2020.
Okay, shifting focus to an Economic Times report now. Greenco, Tata Power, JSW Energy as well as Adani Group have been approached to assess their interest in acquiring a strategic stake in PTC India. Remember, the stock had been in quite a bit of uptrend and was locked in upper circuit for many sessions on account of this news flow, though there was a bit of a clarification coming in from the company as well. But my colleague from the Economic Times, Mohit Bhalla, is joining us with the latest details on that. Mohit, hi, good morning. Tell us what you are picking up from your sources.
We've been hearing about this for some time now that PTC India has probably been in play, with some of the promoters who are all public sector companies actually looking to divest their stake and initiating a formal process. Now, obviously, this comes on the back of some of the governance concerns that have been plaguing the company and its financial services subsidiary over the past year. And that's probably been one of the triggers for that stake sale process and prompted it. We believe that this has the backing and the diktat of the Power Ministry, which is why the four PSUs who are the promoters, NHPC, NTPC, Power Finance Corporation, and Power Grid Corporation, are doing the stake sale. So. There's preliminary interest. I'd like to clarify that the process is still in an early stage. It requires a lot of consensus building because it's a government-owned company, or rather company owned by government or state-owned firms. So there will be a lot of consensus building. Independent committees have been formed by each of these companies to arrive at a floor price for the deal. But we do believe that there will be good interest from strategic players like Adani and Greenco, as well as Tata and JSW for this.
All right, Mohit, good to connect with you. It's been years we haven't spoken actually, right, Mohit?
That's true, Nikunj. It has been a long time.
Yeah, so
very good to connect with you.
Yeah, look forward to meet you very soon, Mohit Bhalla, and of course we were part of the ET team a couple of years ago. So it's so nice to connect with the old friends. Adani Tata PIP for PTC stake sale. I don't track this one, so I will have to ignore confession in terms of the backdrop, backdrop story. Nifty is indicating, SGX is indicating that it could be a decent and a strong start for Nifty, which is what it is. Hemang, Jani, what are your thoughts on IndusInd Bank? Numbers due today. I looked at the quarterly update what IndusInd Bank had reported. Looks like they are getting the mojo back.
I think the numbers should be on track, Nikunj. And this is one bank where, if you look at the overall growth, it is definitely better than many other listed private sector banks. The valuation comfort is very much there. In between, people had concerns that their overall margin profile was not so good because they were not able to attract the deposit. But looking at the overall picture, I think things are looking pretty good. And this would be one of the top picks that we have within the second line of private sector banks because of the growth visibility and valuation comfort both.
SGX Nifty 18,131. So Kunal, अब तो breakout हो गया.
कल हो गया था. Yesterday you were not there in the second half, but then breakout has happened about the 18,000 mark yesterday. And this time around as well, I think it looks very strong. So with most of the Asian markets indices moving in favor, the FII data which you flagged up at the start as well, I think that's also moving, or at least has started to show some positive signs. There is a lot of positive relief which the markets can get this time around. Now, the other data which I was also indicating at the start was that the premium for the index futures is still at 100 plus points for the Feb series. So, which means this is the third consecutive month where we are now seeing 100 plus premium points for the index futures, and that again is a sign of positivity, because if you look at December on an overall basis, January series so far on an overall basis, except for this last couple of weeks of sideways price action, we have been into a positive stance for the indices. So which means that the positive premium is an indication, or the higher premium is an indication of positivity rather than any kind of a circumspect stance from traders.
Okay, so let's see whether that breakout convinces us further today or not, because yesterday there was that last hour rally that really pulled it, and finally the first FII buy figure coming in for 2023. But let's wait and watch of how convincing that is. But we're talking about IndusInd Bank getting its mojo back, but Hemang, it's L&T as well, which has got quite a bit of mojo going for it, sitting at all-time high levels. Where do you see this one headed now?
Very positive on that entire theme, and I think given that we have budget around the corner, and a lot of these companies which are the defense oriented ones, they are also getting very strong order flows. So I think a lot of things are going for L&T, and it has been one of the best performing stocks. And within capital goods, I think the largest allocation, if one has to put, I think it would be definitely L&T. So we have a positive view, and we think that there is a case for a 15-20% kind of an uptick even from current levels.
I wanted to understand, how is it that you're reading into ITC's acquisition of Yoga Bar?
So Aisha, I think not too significant in the overall scheme of things, but I think the way companies going about creating a good portfolio of brands, definitely it bodes well. And we think that now that ITC, after a very strong run up, is consolidating at current levels, based on the quarterly numbers and some of these smaller positive news flow, could actually help it move further. So we have a positive view there, and it is one of our preferred picks within the FMCG pack that is there.
Feel good to go for ITC? Buy at current levels or no?
Well, absolutely, yes. I think ITC is a buy, undoubtedly. The stock had this period of, I think, 2-3 years back, where it remained into an underperforming zone. Even in the last 1 year, I think the first 8-9 months of 2022, the stock did not find too many buyers, even though when it was scaling up hard, scaling past above the levels of 250, 300. But then when the stock came closer to the 350 mark, is where there were a lot of bullishness which had come back into the stock price, and from there the stock has gone into a time-wise correction. So I think the last 3-4 months the stock has gone through more of a time-wise correction, not a major price-wise correction, and that's always a good sign for the stock price when they are maturing into a higher kind of a price range. So I would be bullish on ITC. 400 could be a target range which one could watch out for, but then the time frame would not just be 2-3 months; it would be slightly more than that.
Nooresh, what do you make of yesterday's or recent price action in BOB, Union Bank, Bank of India? They've reversed. I mean, these are the poster boys of the of the banking sector, and the poster boys, or the three horsemen, as I like to call them, SBI, BOB, and Can Bank, all of them are looking slightly puffy duffy.
So the larger pack is still looking okay in terms of the fact that they're getting closer to supports. SBI looks the best one, given that it has not rallied a lot. 550 was the high last year, so that is something will keep it apart. But if you look at the rest of the smaller names, it was a strong recovery. So mind you, so if you look at a Bank of India, the stock went from sub 50 to 100 plus levels, corrected to 75, again was at 100 yesterday, and now has taken a little bit of a dip yesterday post the quarterly results. But overall, that itself is a very strong recovery as such. I would expect some bit of more consolidation before there is another trend. So it is still a overdone move for most of these smaller names. So Union Bank of India went from 40, 45 to 95, dropped down to sub 70, and has recovered back to 80s. So out here again in this whole pack of smaller PSU banks, I would expect consolidation to continue. The highs made in December would be tough to cross and sustain for some time, and maybe after a few weeks or a few months have a fresh look on them, or only on sharp declines from here on. But if one wants to bet on the PSU bank, the best one is State Bank of India, which has underperformed and it has been sideways for quite some time. In this rally of October to December, even a Bank of Baroda moved up, a Can Bank moved up a bit, but State Bank has gone nowhere over the last 1 year. So the stock had made a top around 515 last October, and we are today at 590 odd level. So the returns have not been great. and it has been consolidating. So if the rally has to continue, the next one to take lead would be SBI.
Right, okay. Just looking at a list of some of the newly listed names, or rather, I should say, a 1-year-old listing history names. So, while in the year gone by, you had about 40 companies make it to the bourses, 12 of them are continuing to trade below their issue price. And Hemang, clearly the stark one that stands out is LIC. Even after the recovery that the stock has seen from the lows, it's still around the 706 levels, far cry from their issue price of 949.
Yeah, absolutely. I think there is a big turnaround and sentiment change for some of the IPOs, and not only the new age tech companies where there was so much of exuberance and euphoria. They're going through so much of issues, and even at these levels, I think the market cap or the profitability wise, there is a huge gap. So one is really not sure how exactly they will revive and over what time frame. LIC actually is a slightly different kind of a ball game, where for some reasons the interest was missing. But when we looked at the numbers and the valuation both, we think that it looks quite okay. Now, like how we have seen the PSU banks coming back into the vogue, I think at some point you will also see LIC really catching up big time. So I think the 700 odd levels is a very compelling valuation and price, and we think that it's a great buy for 1 year or slightly longer term perspective.
2022 listings, and look at the change here. Delivery down 35%, Inox Green, Wind Energy 27% down, LIC down 26%, Uma Exports, I don't track this one, down 23%. Kunal, where can you spot a fresh uptrend? I mean, where do you think the stock has consolidated enough, and it is going to be that this is going to be the ITC of 2023, where nobody likes it, everybody hates it, and then suddenly, by the time the year ends, everybody will love it?
So I'm not sure on the larger cap front, but I think L&T Finance is one stock which I believe falls in that category from the mid cap space. The stock has consolidated long enough. I think it's been almost 2 years or 2.5 odd years for L&T Finance sub the 100 levels, decisively. The stock tried to get into a breakout mode last week as well, and I believe that a stronger breakout is impending for the stock price, and I believe possibly in the next in a couple of months the stock could break out of that, not just break out of that 100 odd mark, but climb up substantially higher from those levels. From the larger cap front, I would still believe that Tata Motors is also one of the other stocks which I would be very bullish on from current levels. It had a fantastic 2020 second half and 2021, but then over the last 1.5 odd years, approximately, the stock has corrected, consolidated. So I think even this stock could be getting up for a covering up for huge underperformance. So even if someone has a time frame of 1.5 odd year, I think 500, 525 could be a nominal target which one could be eyeing at least over that kind of a time frame.
Okay, so that's the take coming in as far as L&T Finance Holdings is concerned. But Hemang, one space or one segment which has done exceptionally well is the entire luxury goods space. Now, even if you look at the 9-month data coming in from Landmark Cars, the total revenue has jumped up 41% year on year, and that has both the elements of vehicle sales as well as after sales service. Even with respect to real estate, we have seen that the luxury segment has been doing quite well. What's the best way to play this theme, if at all?
I think, Anisha, when we look at the consumption and the premium segment, what stands out to us is something like a Metro Brands. I think given the positioning that they have and the kind of steps that they've taken to really roll out more products, the overall margin accretion initiatives, I think that definitely stands out. And we do think that given the kind of growth visibility which is there, these companies can provide a good 15-18% kind of a CAGR for next 2 to 3 years. Titan is another name that really is fitting into that, which is actually corrected despite a 12% kind of a growth. But I think this is another very good evergreen kind of a story in the jewelry and the discretionary consumption space.
also reported its numbers overnight. So that was largely in line with expectation, wherein the revenue jumped 24% year on year. There was a profit growth of around 12%, though we have the store addition also, which continues to be quite strong. So 48 new stores added versus estimated 21 stores. So that's something that might be in focus today as well. But the stock hasn't done much over the course of last 3 months. Hemang, actually in this entire footwear segment, we had seen that sudden euphoria come in. But that seems to have fizzled out.
Yeah, absolutely. I think in between we had a big spike in some of these names, and there was a correction, and some of the companies actually disappointed on the performance. But I think this is a story for next 2 to 3 years, and we think that if the companies can deliver high margins and a 15 to 18% kind of a growth, people would be comfortable paying a slightly higher valuation. So I don't think we should get negative on this at this point, given that the performances are very good from some companies like Metro.
Okay, Hemang, stay with us. Going to quickly take it across to our chartists and get in some mid-cap trading ideas. Kunal, on your list?
So a couple of days back, I had given a buy on Atul Auto. The stock did pretty well yesterday, up around 7 to 8%. Would suggest a buy on the stock even at current levels. 335 could be a revised target. Stop loss at 295.
Right. Nooresh, what about your mid-cap ideas?
So that would be a buy on Tata Communications with a stop loss at 1350 and a target price of 1550 positionally. The stock gave a breakout about 1350 levels, made a move to 1430, did a retest day before yesterday and a couple of times over the last few sessions, and now made a comeback move yesterday, expecting a new leg of the move to start cross 1430 first and then head up to 1550, a classical cup and handle formation here. So expecting this to take leadership, go all the way to 1550, 1600 in the short to medium term.
Okay, so those were the stock specific recommendations, but let's